Everyone, this is Dale Anderson from Fabrik Property Group. So in case you missed it, I just wanted to give you a quick update on the latest Zoopla UK housing report. Zoopla is one of the leading providers for market research and one of the biggest portals in the UK. So they provide some very accurate data and assessments. So I'm just going to share the screen and bring up the report. So what we are seeing is a plus 6.5% UK house price growth still year on year to date until January 2023. 10% home buyer demand above 2019 levels. Buyers are looking now more predominantly at 1 and 2 bedroom flats. So there's an increase or spike in the demand for apartments, primarily probably due to affordability. So summary, house price growth ground to standstill in Q4 2022, dragging the annual rate of house price inflation lower to plus 6.5%. Most regions registered small price falls in Q4 2022. Demand has rebounded to pre-pandemic levels in line with 2018 and 10% higher than in 2019. So it's going to be a slow start to Q1. In fact, early buyers are focusing on flats with a shift away from houses in response to higher borrowing costs, which have hit buying power. We do expect demand to improve further in the coming months as mortgage rates continue to fall, with certain lenders such as NatWest who've recently reduced their rate by 0.7%. Would-be movers realize that large price falls are unlikely to materialize, and perhaps there's more just a bit of a slowdown in the market with slight price reductions in some areas. So here you can see a chart and also quote, it's going to be a slow start to 2023, but we expect demand to pick up in the coming months as the economic outlook becomes clearer and mortgage rates settle around 4 to 4.5%. Momentum in price inflation falls away quickly. So house price growth stalled in Q4 2022. There's no doubt about that. In response to the 50% drop in buyer demand in the final months of 2022. This will feed into a rapid slowdown in the annual rate of price growth. At the end of 2022, UK house price inflation had slowed to 6.5% from 8.3%. At the end of 2021, trend matched across all regions except London. So most areas recorded small price falls in Q4 2022 as buyers negotiated harder on price. Moreover, the discounts to asking price to achieve a sale widened quickly at the end of 2022. So this gap between asking and achieved price is now holding at 3 to 4%. There's no sign of the worsening at this stage. The important thing to factor in is the gap has widened. Sellers will feel under increasing pressure to reduce asking prices, putting further downward pressure on headline prices. Additionally, modest price reductions are likely over Q1 2023 as sellers continue to adjust asking prices in line with what buyers are prepared to pay for the property. So we are going from a seller's to a buyer's market. Could actually be a good time to purchase property with more supply potentially coming to the market. Yeah, you can see a chart, house price growth stalls at the end of 2022, and then obviously going into Q1 2023, we will have some more news to follow. Demand has rebounded in line with pre-pandemic years. Demand for homes has rebounded in the first few weeks of 2023, but do remain well below the levels of January 2020 to 2022. So on a regional basis, demand and sales agreed are holding up in the northeast, Scotland and Wales, where home values are below the national average. Market conditions remain weaker in the southeast, southwest and east Midlands, where prices are higher or have grown rapidly over the last 2 years. So at the start of 2023, there is a slow burn expected. At the start of the year, we are seeing prices come down gradually. A portion of households hoping to move in the coming year will be waiting to see whether house prices start to fall more quickly in Q1. So as well as how much further mortgage rates are likely to fall back or go up, nobody really knows. Mortgage rates for new businesses are now generally below 5% and look set to remain in the 4 to 5% range throughout 2023. All the outlook becomes clearer after Easter. We believe that demand is likely to pick up further. How much this depends on the economic outlook and the strength of the labor markets, as well as the trajectory of consumer price inflation and what this means for interest rates. So as you can see by this chart, buyer demand tracks 2018, and then we're coming into December, and obviously you can see there's a bit of a dip here, but then we start to see a bit of a rebound. So a bit of optimism and positivity returning to the market, in fact, later this year. More supply boosts choice and reduces pressure on prices. So the other notable change in recent months has been a continued growth in the number of homes for sale, and a scarcity of supply has been a key feature of the market in 2022. But we do now see upward pressure on home values. With mortgage rates going up, more people will likely be selling their properties with more supply coming to the market. So there may be more options and a booster supply for would-be buyers. We'll have more to choose from, and they may be able to get a better price where the market before was inflated. In fact, I think overinflated. It was going up very quickly. So it's about time that the market had a bit of a cooling off period. So early 2023 buyers shifting preferences towards flats. So another trend we are seeing is people that were buying rural homes during COVID have assessed their living requirements with inflation and gas prices going up astronomically. In fact, recently they are now assessing if they're going to be living in a house in a rural area or they want to be closer to the city for work opportunities. So we are seeing a shift. 27% in fact of new buyers are looking for 1 and 2 bedroom apartments, up 22% a year ago. So we're seeing a shift in the dynamics in demand there, from homes and freehold homes back into apartments closer to city centers and town centers. Demand for flats grows in markets adjacent to big cities. So again, as I mentioned, some of the biggest increases in demand for flats have been in towns adjacent to London: commuter belt, Slough, Watford, Chelmsford, Guildford, and Dartford, where the relative price differential is attractive for those who work locally in London and are able to work more flexibly and commute into work. So the same is true for other regional cities such as Huddersfield, Stockport, and Wakefield, where you also have a lot of students. What is the outlook? 10.5 million turnover, so the value of all 30 million homes in the UK at the end of 2022. It's early days to get a clear read on the market outlook for 2023. The economic outlook has improved slightly in recent weeks, but the squeeze on household disposable incomes is a very real issue with a direct impact on sales activity. That said, the pressure on incomes combined with the cost of running homes is likely to drive a certain amount of movement in the market in 2023. A sizable amount of embedded equity in many millions of homes may also encourage more movement to release equity, so downtrading to release equity and cut the energy bills, supporting home moves in 2023. So the latest value of housing report found that the total value of homes in the UK is over £10.5 trillion, with another 1.6 trillion of mortgage value. There's almost £8 trillion in the housing equity in the UK, which is huge, right? In the short term, we expect further low single-digit price falls in the first quarter of this year, in 2023, but the housing market is actually in better shape than most people think. So with the headwinds behind us, we are looking at the economy improving, inflation may become stabilized further, and we do see that the market is cooling. So in the house price index, country, region, and city summary, this is the assessment of the annual percentage change in house prices. And as you can see, Nottingham 9.1%, Manchester 8.1%, Birmingham, Leicester, Liverpool, Cardiff. Many of these cities and towns we do recommend for investment. We can actually purchase lower entry-level apartments and properties near the city centre or town centres. Some of them you can do short-term lets. Some of them have really good tax breaks on them. And then some of them are fully managed that come with either a rental assurance option on them, or you are buying into student accommodation properties, which are quite resilient to a downturn, and they provide a very good yield compared to most traditional buy-to-lets. So if you're concerned about a downturn, you may want to look at apartments or flexible property, which can accommodate young professionals and students in these regional cities and towns. So the Zoopla House Price Index City Summaries, house price shows that the last 12 months trend in annual and monthly growth rates. Red bars are negative values. Each series has its own axis setting, provided a more granular view on price development. And again, we just look at the percent year-on-year change, and it shows you all the top cities there in terms of house price growth over the last year or so. And as you can see, Nottingham 9.1, Manchester 8.1. So we're available to offer all this advice and provide these market research reports for free. Just get in touch with a consultant. We'll get you updated on the latest market news. This one's a little bit late. I've been preoccupied with some new product launches, so please do go and have a look at our website. You'll see what's available. And I hope you find this information useful. Click subscribe to our channel. We do appreciate you following us, and please check out our Trustpilot so you can see all our client reviews as well. We're very proud of our customer support and our aftercare, so it would be great to have a chat, book in a discovery call, and find out how we can help you achieve your financial goals by investing in UK property. Thanks for your time and take care.